So Kunal, 3%, the recovery or the rally or the bout of short covering, that has happened. What happens now? Will markets move into sideways consolidation or there is real momentum here?
So the momentum is very strong, but even in phases of strong momentum, there are always phases of pauses or phases of silent moves for the indices where the index remains into a range and the action shifts towards very specific kind of stocks and sectors. So in that kind of a pause is where we see the market, the mid cap and the small cap end of the market tending to outperform a bit. Now the data is also very intriguing, Nikunj, because over the last 5 or 6 days, from the time we've seen the recovery for the index, there has been a massive amount of short covering. It went to so the markets went to a short covering mode on the RBI policy day. Even on a day like yesterday, where there was a muted kind of a price action for the indices, both the Nifty and the Bank Nifty. Nifty was up marginally, Bank Nifty was down some 200 odd points. But the open interest still, we managed to see some reduction. So there was a 5% drop in the OI on the Nifty, I think more than 8.5% drop in the OI on the Bank Nifty. And this comes at a point where the premium is also not very high for the indices. So the premium is, I think, 45, 50 points for the Nifty and some 150, 200 points for the Bank Nifty, which is more or less 0.5% odd. Now, that itself tells you that the market construct is getting into a tilt of more of a pause for the indices. We would not probably expect a major kind of an upward move on the index, but then this silent phase of pause or a consolidation would still be termed healthy. Now, the two resistances that the markets have established, 17,700 on the Nifty and 41,000, 41,050 on the Bank Nifty. These are the two levels to watch out for on the upside. Whenever we see a breakout of these two levels is where we expect momentum to come back again into the index.
Right. Nooresh, hi, morning. How is it that you're looking at the market landscape?
So we are getting into a phase where a couple of days of pause, given that we've bounced back from 16,800 almost closer to 17,700. Some bit of a pause is normal. And this pause is something like a drifting upwards pause. It's not something where we correct a lot. So possibly we could get into a range of 17,400 to 17,800 or maybe even 17,500 to 17,800. So for me, going forward, 17,800 becomes a crucial price point, which earlier used to be a support, then a resistance. Once we start crossing above 17,800, that is where the momentum again gets back into the markets. So till this zone of 17,500, 800, time to be focused more on specific stocks. The mid caps and the small caps have a lot to catch up. And there are a lot of stocks where there is a lot of catch up. And we are seeing a lot of moves very different. So we have capital good names like L&T hitting new highs, but you have IT still struggling. So time to be more stock specific.